A world divided, the US and China in a tug-of-war. Imagine a world split in two, a world where two superpowers are constantly at odds, each trying to outdo the other in every possible arena. On one side stands America, a giant with a long history of leadership. The United States has been a beacon of democracy and innovation, leading the world in technology, culture, and military might for decades. On the other, China is rapidly rising, its economy booming, its ambitions soaring. With its vast population and growing technological prowess, China is positioning itself as a formidable competitor on the global stage. This is not a scene from a science fiction film, it's the reality of our times. The streets of New York and Beijing are bustling with activity, each city a testament to the power and influence of its nation. The US and China are locked in a geopolitical rivalry, a competition that will shape the 21st century. Diplomatic meetings are tense, with each side trying to gain the upper hand. From trade wars to technological supremacy, the stakes are high, and the world is watching closely. The flow of goods and services between these two giants affects economies worldwide. This rivalry is not about good versus evil. It's a complex interplay of economic interests, political ideologies, and cultural values. It's about two powerful nations, each with its own interests, vying for influence and dominance. The business districts of New York and Shanghai are microcosms of this larger struggle. Understanding this complex relationship is crucial for anyone who wants to navigate the choppy waters of global politics and economics. Analysts and economists spend countless hours dissecting data to predict the next move in this high-stakes game. So, buckle up as we delve into the fascinating and sometimes unsettling world of U.S.-China relations. The journey will take us through the corridors of power, the trading floors, and the streets of both nations. Our journey begins by examining the current state of affairs. Newsrooms around the world are abuzz with stories of tariffs, trade deals, and diplomatic skirmishes. How did these two economic powerhouses, once partners in globalization, become locked in a tense standoff? Let's find out. We'll look back at the history of their relationship, from the early days of trade agreements to the current era of competition and rivalry. Chilly relations when friends become rivals. The relationship between the US and China is anything but cozy these days. Gone are the days of cordial handshakes and optimistic pronouncements about cooperation. In their place, we see suspicion, mistrust, and a hardening of stances. This shift didn't happen overnight. It's been brewing for years, fueled by a complex interplay of economic, political, and strategic factors. One major sticking point is trade. The US accuses China of unfair trade practices, intellectual property theft, and currency manipulation. China, in turn, accuses the US of protectionism and trying to contain its rise. This trade war, with its tariffs and counter-tariffs, has rattled global markets and created uncertainty for businesses worldwide. Beyond trade, there's the issue of security. China's growing military might and assertive stance in the South China Sea have raised alarm bells in Washington. The US sees China as a potential threat to its regional dominance and global influence. This security dilemma further complicates the relationship, making dialogue and cooperation even more challenging. Two economies intertwined, the US and China's trade dance. Despite the political tensions, the US and China remain deeply intertwined economically. They are the world's two largest economies, and their trade relationship is vast and complex. China is America's largest trading partner, and the US is China's third largest. Every day, billions of dollars worth of goods flow between these two economic giants. From smartphones to soybeans, from automobiles to apparel, the US and China rely on each other for a wide range of products. American consumers benefit from affordable Chinese goods, while American companies profit from access to the vast Chinese market. Similarly, China needs American technology, agricultural products, and investment to fuel its economic engine. This interdependence creates both opportunities and vulnerabilities. On the one hand, it fosters economic growth and raises living standards. On the other hand, it makes each country susceptible to economic shocks originating from the other. The current trade war is a stark reminder of this delicate balance and the potential costs of decoupling these two intertwined economies. Section 4. Global supply chains in disarray, the domino effect. The U.S.-China trade war isn't just a bilateral spat, it's sending shockwaves through the global economy. The ripple effects are being felt far and wide, impacting not just the two largest economies but also smaller nations that are intricately linked to these giants through trade and investment. The interconnected nature of today's global economy means that a disruption in one part of the world can have far-reaching consequences, affecting everything from stock markets to consumer prices. One of the most significant impacts has been the disruption of global supply chains. These supply chains are the lifeblood of modern commerce, ensuring that products and raw materials flow smoothly across borders. When these chains are disrupted, it can lead to shortages, delays, and increased costs, which ultimately affect consumers and businesses alike. The complexity of these networks means that even a small hiccup can cause a cascade of problems, much like a row of dominoes falling one after the other. For decades, companies have relied on a complex network of suppliers and manufacturers spread across the globe to produce goods efficiently and cost-effectively. This global manufacturing network has been fine-tuned to minimize costs and maximize efficiency, often relying on just-in-time production methods that leave little room for error. However, this very efficiency has also made the system more fragile, as there is little buffer to absorb shocks and disruptions. China, with its vast manufacturing capacity and low labor costs, has become a critical link in this global supply chain. The country's ability to produce a wide range of goods at competitive prices has made it the go-to source for many companies around the world. From electronics to textiles, China's factories have been the backbone of global manufacturing. However, this heavy reliance on a single country has also created vulnerabilities, as any disruption in China can have a ripple effect across the globe. However, the trade war, coupled with the COVID-19 pandemic, has exposed the vulnerabilities of this interconnected system. Factories have been forced to shut down, shipping routes have been disrupted, and the flow of goods has slowed to a trickle. The pandemic has highlighted the risks of relying too heavily on a single source for critical supplies, prompting companies to rethink their strategies and seek more resilient solutions. Tariffs, sanctions, and logistical disruptions have increased costs, delayed shipments, and created uncertainty for businesses worldwide. The imposition of tariffs has made goods more expensive, while sanctions have restricted access to key markets. Logistical challenges such as port congestion and shipping delays have further compounded the problem, making it difficult for companies to maintain their supply chains and meet customer demand. Companies are now scrambling to diversify their supply chains, reduce their reliance on China, and find alternative sources for raw materials and components. This diversification effort involves identifying new suppliers, setting up new manufacturing sites, and reconfiguring logistics networks. While this process is costly and time-consuming, it is seen as necessary to build more resilient and flexible supply chains that can better withstand future shocks. This reshuffling of global supply chains is a complex and costly process. Companies must navigate a myriad of challenges, from regulatory hurdles to logistical constraints, as they seek to establish new supply routes and build relationships with new suppliers. The transition is fraught with risks, but the potential rewards of a more resilient supply chain make it a worthwhile endeavor. It's creating winners and losers, reshaping global trade patterns, and forcing companies to rethink their manufacturing and sourcing strategies. Some countries and companies are emerging as new hubs of production, while others are struggling to adapt to the changing landscape. The shifts in trade patterns are also influencing geopolitical dynamics, as nations vie for economic influence and stability in an increasingly uncertain world. The long-term consequences of this disruption are still unfolding, but one thing is clear: the era of cheap and easy globalization is over. The future of global supply chains will likely be characterized by greater complexity, higher costs, and a renewed focus on resilience and sustainability. Companies and countries alike will need to adapt to this new reality, finding innovative ways to navigate the challenges and seize the opportunities that lie ahead. Section 5. Europe's balancing act, caught in the crossfire. As the U.S. and China lock horns in a fierce economic and geopolitical rivalry, Europe finds itself caught in the crossfire. This situation is not just a simple matter of choosing sides, it is a complex and multifaceted challenge that requires careful navigation and strategic foresight. On the one hand, Europe shares America's concerns about China's trade practices, human rights record, and assertive foreign policy. These issues are not trivial, as they touch upon fundamental values and principles that Europe holds dear, such as fairness in trade, respect for human rights, and the maintenance of international order. On the other hand, Europe has strong economic ties with China. These ties are deeply entrenched and have been built over decades of trade and investment. China is one of Europe's largest trading partners, and the economic benefits of this relationship are significant. Europe benefits immensely from access to China's vast market, which provides opportunities for European businesses to grow and thrive. The Chinese market is not just large, it is also dynamic and rapidly evolving, offering a wealth of opportunities for innovation and expansion. This delicate balancing act presents Europe with both challenges and opportunities. The challenge lies in managing the competing demands and expectations of its key partners, while the opportunity lies in leveraging its unique position to play a pivotal role in shaping the future of global trade and diplomacy. The U.S. is pressuring Europe to take a tougher stance against China, urging it to reduce its economic dependence on China and join its efforts to contain China's rise. This pressure is not just diplomatic, it also comes with economic and strategic implications that Europe cannot ignore. The U.S. argues that reducing economic dependence on China is essential for Europe's long-term security and prosperity. It believes that a united front against China's practices will be more effective in bringing about change. The U.S. wants Europe to join its efforts to contain China's rise, believing that a coordinated approach will be more successful in addressing the challenges posed by China's growing influence. However, Europe is wary of being forced to choose sides in this rivalry. It understands the risks of aligning too closely with one side, as it could jeopardize its own strategic interests and economic stability. Europe wants to maintain its strategic autonomy and pursue its own interests. It seeks to balance its relationships with both the U.S. and China, without being drawn into a zero-sum game. This approach allows Europe to engage with China on its own terms, while also addressing its concerns through dialogue and cooperation. It believes that constructive engagement is the best way to influence China's behavior and promote mutual understanding. Europe is trying to chart a middle course, engaging with China while also addressing its concerns through dialogue and cooperation. This approach is not without its challenges, but it offers a path forward that avoids the pitfalls of confrontation and isolation. Engaging with China while also addressing its concerns through dialogue and cooperation is a delicate balancing act. Europe believes that this approach will allow it to protect its interests while also contributing to global stability and prosperity. Europe is seeking to diversify its economic partnerships, looking beyond China to other regions such as Africa, Asia, and Latin America. This diversification strategy is aimed at reducing its dependence on any single market and enhancing its economic resilience. Strengthening its own technological capabilities is another key priority for Europe. By investing in innovation and technology, Europe aims to enhance its competitiveness and secure its position as a global leader in key industries. Europe also seeks to play a more active role in shaping global trade rules. It believes that a rules-based international order is essential for ensuring fair and open trade, and it is committed to working with its partners to uphold these principles. However, navigating this complex geopolitical landscape will require deft diplomacy, strategic thinking, and a willingness to stand up for its own values and interests. Europe must be prepared to make tough decisions and take bold actions to protect its future. In the end, Europe's ability to navigate this challenging environment will depend on its unity, resolve, and vision. By standing firm in its values and pursuing a balanced and strategic approach, Europe can turn this challenge into an opportunity for growth and leadership on the global stage.